When to talk to a commercial banker today on the Landlord Coach Daily Is show.
5, 4, 3, 2, 1, 0, ignition, liftoff.
Boom, chicka, boom, ba boom, chuck. Hey there, everybody. Welcome to the Landlord Coach Daily Is show. My name is Mark Dolfini, Landlord Coach and host of the Landlord Coach Daily Is show. It's good to see you, and I am really looking forward to the weekend because I don't know, sun's coming out. It looks like a pretty day out there. It's not super warm, but hopefully it is warming up wherever you are at. Please tell me where you're coming from. I always like to hear. I know there's different people out there in different parts of the United States that are watching this show. So please let me know where you're coming from, and would love to hear about your market. Tell me where it is that you're coming from. So today we're going to be talking about when to talk to a commercial banker, and I just finished up another segment of adding more value to the Become a VIP in the Rental Business course about how to buy properties that are these off-market deals. Like right now, you want to be on the right side of retail. So if you are, the whole concept of that is if you're going and paying retail for properties, it's really going to be hard for you to cash flow them. It's really going to be hard to get the rate of return that you want if you're paying retail on these properties. So I'll give you a quick example. Being on the right side of retail is really what you're looking for. Being on the wrong side of retail, and I'll give you this analogy. Let's pretend that you go to a Target, okay, and you buy a jacket off the rack and you pay retail price for that jacket. And you take that jacket, you paid $100 plus sales tax wherever you live, unless you're in the great state of Florida. But let's say you pay sales tax and all in you're $110 on this jacket. And you take that jacket and you walk out into the parking lot and you want to sell that jacket for a profit. Okay? So the jacket retailed for $100, you had closing costs of $10, so you paid $110 all in on this jacket. And now you're standing there in the parking lot trying to get someone in that parking lot, convince them to pay $150 for that jacket, right? So you could sell that jacket for a profit. Is that going to be tough? Yes, of course it's going to be tough. You're going to have to be a hell of a salesperson to make that happen. Some of you may have that ability. Most of us won't. And it's just going to be hard to do. Well, that's kind of the same way when you're buying properties and paying retail for them, right? You're buying them through the MLS. You are paying a realtor their commissions because they work hard. They deserve that. You're basically paying retail for the property. For some people, that makes sense because they're earning their cash may be otherwise earning 0.1% and as a return in a savings account, so they can still get maybe a 7 or 8% return even though they paid retail for it. That may make sense for them. For me, it doesn't. I want to make a much greater return. I don't want to get into a property unless I'm making at least 15 to 20% return on my money. So you can do that through leverage and everything else. But that's what I've been working on with the Become a VIP in the Rental Business course. I was putting this stuff together. Part of that acquisition piece that I was putting in the course, how to buy properties that are how to buy them off retail or that are non-retail, was a discussion about how to when it's time to bring in a commercial banker. When you want to, it does commercial loans. Does that make sense? And for sometimes it will. It's a tool in your toolbox that you should definitely learn how to use. And when is that a good conversation to have? When is that a good tool for you to have in your toolbox? When is a good conversation to have? So let's talk a little bit about the tools that they have at their disposal. So lines of credit are probably the most common thing that you would maybe want to use them for. I know a lot of people who have home equity lines of credit on their personal home, and they use that home equity line of credit to buy properties, and then they get permanent financing out and pay off the home equity line of credit, and then they reuse it again and again and again, right? That's not a bad strategy. I know there's plenty of people who do that. But lines of credit, you can oftentimes, especially if you've got a an existing portfolio, they'll add or they'll basically attach and collateralize a line of credit, say $150,000 or $200,000 line of credit, based on the equity of your portfolio, right? So they might attach to 5 or 6 different properties, and they will take a lien position, maybe a second lien position or first lien position, depending on if you've got an existing mortgage or not, and they may give you a line of credit against that. So that might not be bad, especially, which is a really good thing if you are buying properties from wholesalers, if you're buying properties at auctions, if you're buying properties at sheriff sales, if you're buying properties at tax sales, where you have to have a very quick access to capital. Lines of credit are definitely a good thing to have. So you definitely would want to have that conversation with a commercial lender. Now, talking about borrowing as a business, I know there's many investors that want to set up an LLC, and they'll rush out and I've got my LLC set up. I'm like, that's fantastic. What are you doing with it? They're like, I don't know. I don't really know why, but I knew I needed to have an LLC. So guilty, done it, right? But I didn't really have any real purpose behind except, setting it up, except maybe just have it exist in name. But none of my properties were under the name of the LLC. And many times, even if you are buying properties through a commercial lender, with their funding, right? You're using their funding to get the properties. They're still going to want you to be signing on as a guarantor. So it's not like it's going to let you off the hook, but it does offer you a layer of protection in terms of asset protection and things like that. So it's a conversation definitely for not only an attorney, and it's not just an attorney thing, but it's also a conversation to have with a tax accountant. So make sure that you're getting both sides of that conversation. So then you can also get, let's say that you just want to get a line of credit set up. You can get what's called a guidance line of credit, right? That it's basically already you're pre-approved, I guess, for a line of credit is another way to look at a guidance line of credit. But let me just make a quick distinction between a residential banker and a commercial banker. They're just different worlds. And from a commercial banker, you can pretty much buy any type of property that you want. You can get funding for any type of property. The discounting might be different, meaning that what they will allow for loan to value might be different, whereas 75% loan to value might be about, right for a residential purchase. They may only want to offer 60% loan to value on a, mixed use Class C type property. It just depends on the nature of the collateral, the nature of the property that you're buying. And if you wanted to buy an old bowling alley to renovate that's a little bit more risk, so they may discount that further. So just understand that. But anyway, I'm hearkening back to the days back when I was in commercial lending, and I loved it. I was really good at it, but I decided that I wanted to do something different. So I left banking a number of years ago after a 12-step program. So I'm kidding. Don't get upset with me if you're a banker out there. But the conversation needs to be had, though, before you need the funding. I mean, commercial bankers, I like having a conversation with a community level bank, meaning and what do I mean by that? Generally, they're going to be smaller banks that are going to be about under $1 billion in assets. And I know that sounds like a lot. I'm actually not kidding. It's under $1 billion in assets. It's a pretty small bank. That's you'd be looking at banks that are startups, that are community level banks. You might be looking at $500 million, $600 million in assets. That's a pretty small bank. They may be in your local area. They may have the name of your town and called community bank, so blah blah community bank. Generally, they're only going to have a handful of locations. They're not going to have highly sophisticated apps and online banking. They will have it, but it's not going to be real highly sophisticated. So, but most of them are getting there. Most of them do a pretty good job of keeping up their infrastructure and building that up. But the point is, though, is to have these conversations with these community level bankers sooner than later. So, and the reason I like dealing with the community level bankers is because there's generally not this long, sucky loan committee that it has to go through. Generally, you're talking to the individual that will make the decision on the loan. They may have an underwriter that they're working with, but generally the underwriter is like next door, right? It's not going to some office that's located in a completely different state. And, they're going to ask you for the last pint of blood 3 times over just because of the underwriter's feeling feeling nervous. So that's why I would say I like getting in contact with them before I need funding. So how do you do that? You pick up this thing, right? And you actually dial numbers and you actually ask to speak and set up a time to speak with them. I'm going to tell you this though. If you're kind of a disaster financially, don't call them and waste their time. I mean, this is if you've got legitimate assets and you've got some cash in the bank, and I mean, some legitimate amounts of cash in the bank, $30, $40, $50,000 in cash, you're highly liquid, these are the times when you start having the conversations with the commercial lenders. If you've got 3 or 4 properties already, or you've got the wherewithal to buy properties already, that's the time to start having that conversation to open up the dialogue with these commercial bankers. Now, does it mean that you can't do the same thing with a large commercial bank? Not necessarily, but just understand that the smaller banks generally can be a lot more flexible in their terms, and that's going to be what's important when you're looking to buy a property. And you might say, well, hey, can you give me 25-year amortization or 30-year amortization when the large gigantic bank will only give you maybe 15 or 20-year amortization. And if you know anything about loan constant, that really ramps up your payments, and it can really be hard on your cash flow when you're trying to buy these properties for cash flow purposes. But the main thing right off the top is build a relationship with them, take them to lunch, ask them what their goals are. They all got goals too. They're mostly trying to build not only their banking relationships as a whole, but they're looking for lending relationships, they're looking for deposit relationships, they're looking for different things. So just like any relationship, you got to water the grass to make it green. Otherwise, you're going to fall victim to what everybody thinks about bankers is they're the first one to loan you money, and they're the first one to want it back as soon as the economy turns sour. So I would just be mindful, build that relationship, get in front of them before you need the money, and it can pay you back in dividends multiple times over. So for those of you who are interested in some videos, you can go check out landlordcoach.com/videos. You can get a copy of the Time Wealthy Investor 2.0 for just covering shipping and handling. And it normally retails on Amazon. I think it's $34, but if you want it for free, just cover shipping, I can get that over to you. Just head over to landlordcoach.com/videos, and there's some other stuff in there that you may find helpful. Okay. Well, that's all I have for today, everybody. Please be sure to place a value on your free time, because if you don't, someone else will. But most important, there is no amount of money that will make time irrelevant. Have an awesome day, and I will see you next time.